Hello friends, welcome back to the monthly pyramid portfolio update as of Wednesday, July 1st, 2026. As usual, I hope you'll find the information in this video useful, but disclaimer, please note that this is not investing advice. It's just my portfolio as it stands today and can change at any time without previous notification. Following an investment strategy without doing the work yourself is almost guaranteed to result in losses. So please be careful, since it's your responsibility to do your own research before investing. At the end of the video, in today's bonus section, we will discuss a topic that is somewhat of an actionable conclusion of last month's inflation video, and the topic discussed is the K-shaped economy. With that out of the way, let's start and look at this month's activity. In June, I bought a little bit more gold and got some free shares from Bursa de Valori București and Aquila, and I sold my Micron position. I am sure it has still potential to grow some more, but at $1 trillion market cap, I don't expect it to double or triple anytime soon. And of course, if it goes out of favor, it might drop like a rock. So I closed the position at a nice 170% profit in a couple of months. In terms of cash flow, alongside the sale of the Micron position, I also got back a big bank deposit or CD, which expired this month, and got the interest on it, as well as received 3 dividends from One United, Evergent Investments, and Beredes Group Societe Generale. That being said, the portfolio as of July 1st is currently looking like this. Please pause the video if you want to analyze each investment in more detail. You can see the Micron entry was removed as mentioned before, and the Aquila and BVB number of units was increased. Finally, the current pyramid allocation portfolio at the end of the first semester is the following. And there is a balancing which actually fits very well with this month's topic. We have crypto, gold, and tech stocks, which all dropped significantly, and even though my value stocks and cash position increased, I actually had a minus 1.0% decline for the month, and year to date we are at minus 1.18% including expenses. Now, before going to the next section, if you are interested in the subject, please leave a like and subscribe to the channel. It really helps bring this completely free information to more and more people. As mentioned at the beginning, in today's bonus section, we will talk about the K-shaped economy as a continuation and more actionable conclusion of last month's inflation video. First, let's start with a quick definition. The K-shaped economy is usually described as a financial divide. The wealthy accumulated assets. Everyone else faced a steadily harder cost of living. But the deeper divide may be psychological. At the top, there is growing confidence that the system remains manageable, predictable, and ultimately under control. Further down, there is growing sense that the opposite is true. History suggests that when these two realities drift too far apart, markets eventually discover the stability was more fragile than it appeared before. Those are the keywords. So, how does this help us? The K-shaped pattern applies to investments as well. Good companies will perform better than the average. As a result, they will make more money, thus performing even better than the peers and making even more money. So we can assume that the best companies in the world or in a certain field will perform better than a single employee or a small business. An index like the S&P 500 containing the best of the best companies has ample support from all investors that cheer them on every day, and will very likely fare much better than smaller competitors, and for that reason it seems unfeasible for people's wages to compound as much as the stock market can compound. Another conclusion is that the upper K, meaning the investors, should win, while the lower K, the workers and small businesses, will eventually lose. This is the eternal battle between capital and labor, and usually capital wins as long as there is stability in the system. The keywords from our definition before. If stability disappears, the capital falls since it's easier to be taken over than labor force is. So now the real question is, will stability disappear anytime soon? Last month in Romania, a political crisis started where the government fell. However, the stock market went actually up, making several new all-time highs in a row, now being above 32,000 points as of yesterday at noon, a jump of over 14% since May 5th when the crisis started, and a plus 30% year-to-date return. As a comparison, the S&P 500 is up only 3.5% since May 5th and 8% year-to-date, which is of course much smaller. If we look historically, we can see that there were no lack of political crises in the beautiful country of Romania. Check out this beautiful chart with all the dumb stuff we did over time. Yet the market still kept going up, so now we are faced with the old conundrum of trying to time the market versus having put in time in the market. Usually, timing the market beats timing it, but will this time be different? Is the risk-return ratio worth it anymore to stay invested in Romania? It's pretty clear that, with all the global issues like wars, inflation going up, extremism rising about everywhere, all those problems are being exacerbated. Whoa, that's a big word for me. What a big word. Anyways, global problems are intensified by the local Romanian problems, which point to a drawdown that should be coming sooner rather than later. So, of course, the logical thing would be to reduce my Romanian exposure, which currently is pretty high at about 18% of the total portfolio being in Romanian equities. But where else to put the money? And is it that a good decision, or is it better to just hold on? Now, the exposure is even higher if we take into consideration all the real estate, the bonds, and the pension fund that I have, which all focus on Romania. Of course, I want to avoid selling unless it's absolutely necessary, and there are some reasons to support this case. First, the Romanian stock market is more mature now and is disputed less and less by the political issues unless they result in new taxes or overall bad policies. The index is also very defensive by nature, with energy and utilities being around 52.5% of the BET index, and banks account for another 27.5%, plus most of the companies also still provide good dividends. And with Neptune Deep coming up next year, GDP should also increase. The second argument is that it's not very liquid and would take months to fully close my positions. This is not necessarily a positive argument, but it is a truth. This is both bad. I think I told the story before, but during another problem in 2018 between Christmas and New Year, the government put a tax on energy companies, so I bought some nuclear electrica and made a hefty profit selling a few months later. However, even if the sums were much smaller than my current exposure, I still managed to move the stock by more than 2% for the day as a regular person trading from a studio apartment. But low liquidity can also be good in that we have the mandatory Romanian pension funds which have a buy and hold strategy, so they mostly accumulate and will soon have their stock limits increased from 25 to 30%, which would create buying pressure due to liquidity mismatch. There is also the potential of having a 401k-like plan implemented in Romania, but even if this will not happening soon, we can see that there are overall more buyers in the market every month, which of course could change suddenly if the market starts going down. Third, I put the work in, and some of the positions I feel are long-term compounders candidates, which I know well and have trouble letting go, like BVB, DN, Norofer, Simtel. which are smaller companies with great growing potential. However, we can think about the worst case scenario, something similar to Greece after the financial crisis, meaning we lose the country rating, investors pull out of Romania, there is some civil unrest, etc. And you could have a decade or more of no growth or very little growth on these companies, and they cannot grow as much as you would expect. Fourth, I do not want to invest and support outside Romania. I really like Romania and I want to support it. But that being said, I wouldn't want to lose all my money just to say that I'm proud to support my country. But even if returns would be slightly less than the maximum possible, I would like to support it to some degree. 5. The final question is, even if I exit, where else to put the money instead? Of course, that means I need to pay transaction fees and taxes on realized gains, and there are not many obvious investments right now to move the money into. Gold is significantly down, Bitcoin is down. As mentioned, the BET outperformed the S&P 500 over the past recent period. So, in the future, will Romania be the lower or the upper dash of the K in terms of investments? So, in conclusion, I'm not selling, so is that basically a bet that not only the Romanian market will not fall significantly this year, but also that it will beat all competitors mentioned above over the next few years, which, when I describe it like that, because we're coming from a higher level, that seems extremely unlikely right now. I will keep you updated with what I decide in the end. However, right now, it seems reasonable to limit my exposure as much as possible, but not dwindle it down all the way. Anyway, that's it for today. Thanks for watching until the end, and I hope you like this slightly different concept, which is very specific, and find it useful in the future. Please don't forget to like and subscribe. See you next month. Au revoir, mes amis.